Yaser Nasser Alulait tells how to invest on real estate. Yaser Nasser Alulait says residential real estate can technically be a passive investment, but it requires fairly active participation. Consumers can invest in real estate in a number of ways, including many options beyond becoming landowners, although it is a proven option for those looking to manage their own properties. More immediate investments, such as buying your own home, rental property, or refurbishment and resale properties are also valuable strategies. Crowdfunding platforms offer many investment options. You can choose whether you want to invest in debt or equity in a stock stack, and how much to invest. However, there are some perks for non-accredited investors, as well as eREITs, private REITs created by platforms where investors can invest up to $500. 3 popular platforms, Fundrise, Crowdstreet, and DiversyFund, offer many different options. Depends on how much money you need to invest, from real estate funds to individual real estate projects. DiversyFund creates private equity investment funds, such as real estate, for everyday investors. With a minimum investment of $5,000, Realty Mogul offers growth or debt-based commercial real estate funds, as well as promotions for rental apartments and other residential properties. At this level, investments are entirely in flagship funds, which include properties across the country, from single-family rentals to logistics centers. These public companies raise money by selling stock and issuing bonds, and use the proceeds to buy and rent properties such as shopping malls, office buildings, apartments, and warehouses. REITs tend to pay high dividends, making them a common retirement investment. Investors who do not need or do not want to receive regular income can automatically reinvest these dividends to further grow their investments. Investors benefit from monthly or quarterly payments and can invest in individual projects or in a portfolio of projects. Investors hope to receive monthly or quarterly payouts in exchange for significant risk and platform fees. Since the investment options are different, there is no specific amount to aim for. You can buy shares in some REITs for a few $100s. But costs and risks can increase when investing in physical real estate, which can make REITs a better choice for those with little money to invest or who aren't looking for a primary residence. REIT is a very low-risk investment compared to outright real estate ownership. By investing in REITs, investors have the opportunity to buy stocks in a commercial real estate portfolio and make money from income-generating properties without actually buying or managing the real estate. REITs, if you don't want to put up with the hassle of managing a rental property or can't find a 25% down payment, a real estate investment trust, REIT, is an easy way to start investing in real estate. REIT, Real Estate Investment Trust. This is like a stock or ETF that owns multiple properties and sells stocks that investors can buy. REITs buy and manage real estate and then sell part of the property to investors. REIT buys something like a condominium and investors can buy units from it. The wholesaler never actually owns the property, but makes money by adding a commission to the final contract. This unique strategy involves securing the property at market value and then appointing the final buyer to purchase the contract. You can buy land just like you can buy a built-up property. You can currently buy property to rent online through a site like Roofstock, which allows sellers of tenant-ready vacant homes to list their properties, streamline the buying process, and assign a property manager to a new buyer. Now that that's out of the question, owning a rental property is a great way to create extra income. It can easily add thousands of dollars to your annual income. If the value of your property rises, you can sell it for a profit, when the time is right, or take out a home equity loan for your next investment. Thus, the real estate sector tends to support the purchasing power of capital by bypassing some of the inflationary pressure on tenants and including some of the inflationary pressure in the form of capital gains. Also, while selling a rental property can take months and mountains of paperwork, a REIT has a liquidity advantage because it is traded on the stock exchange. Real estate investment groups. Investing in real estate investment groups, REITs, is a way to maintain the earning potential of privately owned rental properties while generating more income than premium traded REITs. Real estate limited partnerships, RELPs, provide investors with a diverse portfolio of real estate investment opportunities, allowing you to pool funds with other investors to buy, rent, develop and sell properties that are difficult or affordable for you to manage. REITs invest in various types of real estate, such as shopping malls. About a quarter of REITs specialize in these real estate investments, medical facilities, mortgages and office buildings. If you want your investments to be liquid, stick to publicly traded REITs. Some REITs are private companies. Because of fractional stocks, you can start investing in these types of investments with as little as $1 cash. This also means that you can start investing without using your reserve fund. You must also already have at least 15% of your income invested in retirement accounts such as a 401k, job or a Roth IRA. If you have $100,000 to invest, you should set aside the amount for future expenses. Most people think they need millions to make commercial real estate an investment option. But many developments actually come from multiple investors, and the minimum amount for such an investment could well be $100,000 or less. Although investors may need capital for successful marketing or good faith payments, they will not actually buy property. Developers will post deals and projects they need funding for, and investors can then fund those projects with debt or equity. Since vacations always come with risk when renting out real estate, many groups charge a portion of the rent so investors can continue to earn some income even if their apartments are vacant. Becoming a landlord is one of the most common types of real estate investments. You don't usually see your first home as an investment, but many do. Yaser Nasser Alulait says when you're ready to start buying an investment property, follow these guidelines. If you're familiar with companies, which connect borrowers with investors willing to borrow money for a variety of personal needs, from weddings to home renovations, you'll know how to invest in real estate online.